this afternoon. What more can you fill us in on this news?
So basically, the entire proposal here is to explain that the four-tier rate structure that is being proposed under GST is not inflationary. Even the proposal of the cess will be far less inflationary, or rather it will not really have a cascading effect as much as had you basically raised the tax rates to basically compensate the states on any potential revenue loss when GST actually rolls out. You look at the maths that has been given out, 1.72 lakh crores worth of taxes will have to be raised, out of which 42% will have to devolve to state governments, and then the compensation part will be taken care of. Now, to reach that number, the tax rates will have to be raised by as much. In comparison, a cess which already has a component from the clean energy cess of 26,000 crores, and here the compensation cess as a whole is being proposed as at 50,000 crores. The gap is not much. A cess is a better prospect to go ahead with. Of course, this remains with the center, so states do not get the devolution share, but at least people don't have to pay much higher rates in the 26% slab. Broadly, that is what the understanding is, and that is what is being put forward. Now, we also understand that there is almost a convergence on the issue of cess. It's just that 2 or 3 states like Kerala, West Bengal, Tamil Nadu had raised these questions in the last meeting of the GST Council, and hence a small window has been left open on that front. Hopefully in the 3rd and 4th meeting, and if not that, on the 9th and 10th November meeting of the GST Council, most likely these issues are going to be ironed out. Now, very quickly talking about this rate structure. Again, the concept over here, the overall philosophy of the government is to keep all the mass consumption items at a 6% or a 12%. Now, even in terms of the 1.5 crore excise, there's already an exemption there. So there was only a VAT of 5%. That may move up to 6%. Other items, even like say tea, for example, that may be pulled down from the 18% bracket to 12% bracket. A toothpaste, for example, again an item of common consumption, that may be pulled down from 26% to 18%. However, the bigger luxury items like an SUV or even aerated soft drinks and possibly air conditions in the 26% bracket, and the other items which I'm talking about, 26% plus cess. Now here also the differentiation, the concept is very clear. The tax incidence is not going to go up. What they are proposing is the existing tax rate, from that you subtract 26%, and the differential will be covered by a cess. So it's not that you're going to have an additional top-up excise, probably even not on tobacco products and even not on cigarettes. So this is what the common thinking is as of now. There are 2 questions, however, over here which probably are not answered right now. Nobody is talking about the inflationary impact of services. You will have the service tax rate going from 15% to 18%, right? Majority of the services may be proposed under that slab. Some of them may be on the lower rate of 6% and 12% because many services have an abatement, especially in financial services. That remains to be seen how it pans out. And the second issue is that what will be the modality for the levy of the cess? Will it come through the finance bill finally, or will there be some other modality that the government may like to look into?
All right, Sapna, hang in there. If you could tell us what exactly do you mean by no additional excise duty on tobacco products? Is it not going to be additional to what it currently is, closer to around 40%, or is it going to be normalized at what it currently is, closer to that 10-15% mark?
See, there are lots of tobacco products, lots of items there. There's a whole list. The cigarettes are also classified as per the length of the cigarettes, the same concept that they have in terms of imposition of excise for cars and SUVs and all of that. So suppose the product is at 10% right now, right? Or whatever the rate is. It's not, the tax incidence is not going to go up. The cess will only come in terms of 2 aspects. A, the current revenue base needs to be protected, and the same amount, there'll be a specific objective basically to compensate states. There'll be a separate pool for that. So coming back to the issue of rates, it's very unlikely that apart from the 26% demerit rate, which is what is now being proposed, of course the CA had said 40%, but it's likely to be 26% plus cess. So that is what will remain. There won't be any additional, unlikely that there will be any additional top-up to 26% and cess and then an additional top-up excise. Though, of course, the center has a pass to do that, but it's unlikely. So, more or less, you can say that even for a sin good like tobacco products, it may be possible that the tax incidence will not move up. There will be a status quo.
All right, if the tax incidence does